We'll go on YouTube. All right, so in the Caribbean Business Report, which is the business section of the Observer, the Jamaican Observer, there are two articles that I find interested. I'm just decide to just review those two articles. Now, to the back of that section of the Observer, the Jamaica Broilers Group reported or give us highlight of its first quarter result. All right, so we will look at that. We will review the first quarter result of the Jamaica Broilers. And on the flip side of the said page, the highlight read, European Central Bank makes largest ever interest rate hike. All right, so we will look at that also to see what's happening in Europe. And believe it or not, there's a connection between what's happening in Europe and the operation of Jamaica Broilers Group. So we will look at the connection also. All right, so my name is O'Neill and this is News Archive. So what I'm gonna do, I just give you 2 seconds to just like the video and subscribe to the channel if you're not subscribed to the channel as yet. 1, 2. All right, I could get in at the review. All right, so Jamaica Broilers Group gave us some highlights of its first quarter result ending July 2022. And what they did was to compare July 2022 to the last quarter, the fourth quarter, ending April, all right, 2022 also. The result is unaudited, so it is unaudited financial report, which means that this result is subject to auditors change. So when the auditors come in and review the result, there might be some change. Normally, the changes are not material. So if there's ever changes to be made by the auditor, most of the time it's not material. However, just a word of caution, the change can be material, right? Which might even influence the way you decide to invest. All right, so the report is in accordance with the International Financial Reporting Standard. So that tells you that there's some quality in the report or in the recording of the report. All right, so net profit is up. Net profit is $1.1 billion as reported by this article. That's on the back of revenue of $23 billion. All right, so that seems to be a net profit margin of about 5%, which is a very slim net profit margin. All right, so with these types of companies that have very slim net profit margin, normally it's a volume of business that really drives profit or drives the business. All right, total asset, the company has total asset of $63 billion. Now, check this, compare $23 billion in first quarter result versus $63 billion in asset. So the company is churning out $23 billion in the first quarter with only $63 billion of asset. That is, the company is churning out 1/3 of the value of its asset as revenue, right? So that looks really, really good. However, the question must be asked, how then only $1.1 billion falls down to the bottom line as net profit? All right, so this is the nature of the Jamaica Broilers operation. It really churns out a lot of revenue, but most of that revenue does not fall to the bottom line of the company's operation. All right, so that is something that we will look at. We have reviewed Jamaica Broilers on the other channel that we have, that is the Blue Collar Finance channel. And what I'll do is to post those review in the description, so you can go to the description, look at those reviews so you can get a better understanding of how this particular company operates. Earnings per stock unit is $1.70. All right, so that is as reported by this article. All right, so let us get deeper into the article. The group operating profit before tax is $1.4 billion, which is a 6% reduction from $1.5 billion achieved in the April quarter. All right. So there's a reduction in the operation, the operating profit before tax of the company in this quarter, and that's a 6% reduction. All right. However, we're seeing where revenue for the quarter increased some 12%. So as was stated earlier, revenue came in at $23 billion, and that is 12% increase over the last quarter. All right. So what I want you to pay attention to is that even though revenue is increasing at double-digit rates, 12%, the profit before tax has decreased by 6%. All right. So there's something happening in the Jamaica Broilers Group in terms of its expenses that is eating out revenue or eating out the profit of the company. All right. So we will look at that. Gross profit. And it is very important to know where in the operation is less efficient. Where is the money being lost? All right. So gross profit, there's a reduction in gross profit. All right. And this is where most of the increase in revenue seems to be lost. So gross profit, there's a reduction of 14% in gross profit. All right. When you compare this first quarter gross profit to the last quarter gross profit. So gross profit came in at $5.3 billion. And as I said, that is a 14% reduction in gross profit. All right. So we could just talk about gross profit for a few. All right. So gross profit, how this company operates, inflation is having a delirious impact on the company's operation. All right, so where the company is growing its revenue, however, the profits are not growing. The profits are reducing. All right, net profit, profit before tax reduced by 6%, gross profit reduced by 14%. So it is a gross profit that is having, or the reduction in the gross profit that is having the biggest, the most impactful, is having the most impact on the company's financials, all right, or the company's profit. And it is a increase in inflation, the commodity, increase in commodity prices that is reducing, that is eating out at the company's profit. Now, what you know is that inflation has been increasing. Inflation is a problem in the economy globally, all right? Commodity prices has increased ever since the coronavirus and the supply chain disruption and all these good things. And then the war in Ukraine and Russia is sustaining that the high in interest, the high inflation rate. And we're seeing where that is eating out at Jamaica Broilers profit. All right. So most of that revenue that the company has achieved, that growth in revenue, is due to the increase in prices. So the company seems to be simply passing on those prices to its consumer. However, we see where the reduction in gross profit margin, that means the cost of goods sold is increasing at a faster pace than the revenue. So the company is absorbing the company is also absorbing some of those increased prices, and that is the reason why gross profit margin is falling. All right. All right. So Jamaica Broilers operate from 3 segments. All right. And the operation is divided into 3 geographical segments. So you have the Jamaican operation, you have the American operation, the United States, and you have the Asian operation. The Jamaican operation is a larger part of the Jamaica Broilers operation. All right. So Jamaican operation, I believe, is over 80% of the entire operation. Now, when we look at the segment result, all right, because the article gives us a segment result, the Jamaican operation, the larger part of the operation, is reporting $1.8 billion in segment result, which is net profit from that segment. All right. However, this was a 2%. This came in at 2% lower than the last quarter. All right. So profit is falling off in the Jamaican segment. And again, revenue increased for the Jamaican segment by 7% compared to the last quarter. So the overall company is becoming less efficient, all right, because we're saying where profit is increasing, but revenue is increasing, but profit is falling off. Now, when you look at the Jamaican segment, the same thing is happening. Revenue is increasing, revenue increased by 7%, but profit fell off by 2%. All right, so it is the Jamaican segment that is becoming less efficient, and as a result of that, it is impacting the overall company because the Jamaican segment is a larger portion of the overall company. All right, so anything that's happening in the Jamaican segment will have a pull on the overall company result, and that is what we're seeing. However, let us look at the total return that occurs, the 7% increase that we're seeing in the Jamaican result, the Jamaican segment result. There's a 7% increase in revenue. Now, what drove that increase? All right, so the article read, this increase was primarily driven by increased production and sales of poultry, as well as increased sales of baby chicks to our small farmers. All right, so the increase in poultry, the increase in its operation, and the company is selling more chicks to small farmers. Now, selling more chicks to small farmer is good and it's a bad thing. All right, now baby chicks in the poultry industry is what we'd call that inventory. It's biological inventory. All right, so when a company is increasing its inventory, you would want to believe that business is looking robust and there's future growth. However, it's a bit different with the Jamaica Broilers. Now, they're saying they're selling more chicks to small farmers. Now, small farmers, in a sense, is a competition to the Jamaica Broilers operation, even though Jamaica Broilers is selling to them. All right, so to us, selling more chicks to small farmers really means competition. Now, as it relates to the inventory, as we said, baby chick is inventory for the business. Now, you can say that inventory is increasing, and increased inventory means more business. However, when you look at the cycle of rearing chicken, is very short. It's a short-term cycle, 6 months. 6 weeks, and a baby chick will become an adult chicken. All right. So the increase in baby chick does not tell us anything about the future of the operation. It does not tell us anything about how sustainable the increase in inventory will be going forward. All right. The reopening of the Jamaican economy, particularly the tourism industry, has contributed to the increased demand driving sales. All right. So they're saying that tourism, the opening of the economy coming from on the heels of the pandemic, and the increase in the demand for the tourism product, that is having a good look for the Jamaica Broilers Group. However, we want to talk about the Jamaican operation. We're seeing where the Jamaican operation is getting less, is the least efficient aspect or segment of the operation of Jamaica. The Jamaica Broilers Group. On the ground, as I'm saying, a lot of small farmers have emerged, which we think that is competition to Jamaica Broilers themselves. All right, so small farmers about 20% of the market. All right, and we see where Jamaica Broilers, along with the Caribbean Broilers, control the 80% of the market. Now, we believe that the Jamaica Broilers is coming under competitive pressure from Caribbean Broilers. All right, so we believe that this is having some impact on the company's operation. All right, the direct competition that it faces from Caribbean Broilers. All right, so we're up on the ground and we'll see what go on in terms of where small farmers are getting their feeding to buy now. The Caribbean Broilers feed is less expensive, so smaller farmers are choosing to buy Caribbean Broilers feeding. That's a Nutramix feeding as against IPRO feeding. All right, so we believe that stiff competition on the ground is what is keeping the Jamaican operation less efficient, along with the increase in global commodity prices. Now, when we look at the other segment, which is the American segment, is a fast growing segment, and it's really a segment that is having a positive impact on the Jamaica Broilers Group. So the US segment report net profit of 18, or operating profit of 1800 $815 million. All right, that is 168% above the last quarter, or you can say it's 26% above the last quarter. So American market is growing by 26%. That is in terms of net profit or operating profit. Now, when you look at the total revenue for that quarter, all right, for that segment, that increased by 22%. So we're seeing where the profit is growing at a faster pace, even though, albeit not a large amount, it is still growing at a faster pace than the total revenue, which is telling us that that segment of the business is far more efficient. All right. Now, what has caused this fast growing of the American market? What did they attribute that to? The increase was primarily driven by the increased production and sale of the best dressed chicken line, all right, and increased feed sales. So increased feed sale, and the best dressed chicken line. So it seems like Americans love the Jamaica Broilers chicken, the best dressed chicken. All right. Now, it is said that that chicken is the Jamaica Broilers advertise the chicken as being organic. So it's organic chicken. And you know, the American health culture, people are far more health conscious in America. All right. Or you have a market for healthy eating in America. And that is why they are taking on to the best dressed chicken line of product. All right. As against the American chicken, which them say have a lot of what do I call it, boost and all these things. So that might mess up the taste of the chicken. All right. So best dressed chicken is really doing well in America. Now, this other segment of the Jamaica Broilers operation, which we believe that the company made a mistake in entering the Asian market, all right, and they are continuing to operate in the Asian market, and we believe that they are continuing to make a mistake by not completely pulling out of the Asian market. So the Asian operation segment loss was $83 million this quarter, even though they're saying it's a reduction in the loss, a reduction of 77%, or $271 million. All right. So last quarter, the loss was $354 million. So we see where the loss has fallen down 77%. All right. So people might think that the company is pulling out of the red and looking to enter the black. However, the reason for this is that the company has reduced, the company is downsizing in the Asian market. All right. So if you look at revenue reduced by 61%. So the reduction of revenue by 61%, which is smaller than the reduction of the cutting of the loss, is telling you that the company has a little bit of efficiency going on there, but not enough to offset anything that's happening in the other, in the overall Asian market. So what's happening is that as a company downsize, it is getting just a little tips of efficiency, but most or majority of the reduction in the loss that we're seeing is due to the downsize of the operation in the Asian market, and not because the company is pulling out of the red. All right. So what we always say is that when the earthquake happened in America and in Haiti, a lot of G80 and G7 and G8 and G20 and all these large economies, what they did was to pledge a lot of money to the Asian government and the Asian economy. All right. So this is what Jamaica Broilers preempted and went down there to set up shop, assuming that when that money starts flowing in, then business will start to flourish. However, we're seeing where those pledged money was not forthcoming. All right, so the Asian market, the Asian economy remains in rumbles. All right, or in rubbles, and the political situation over there is not getting any better. We see we are just the other day them assassinate the president of Haiti, and that's there's instability in the political situation. So we are suggesting that Jamaica Broilers just root up operation and just leave the area, because we're not seeing where this is adding any value for shareholder. However, I have heard the CEO in an interview, and this is the rationale he gave for staying in the in the Asian market. All right, he's saying that complete shutting down of the business in Haiti might result in more loss than operating on a smaller scale. All right, so what I get from that, what I gather from that is that if you completely close down the Asian operation, you'll have some assets on hand that you'll need to sell off. And if the business, if operation has closed down, you cannot sell those at for any meaningful price. So you might have to fire seal those assets. All right. So in fire sealing those assets, selling off those assets, because you're not operating now, so you can't hold price on those assets. For instance, so you have some chicken in the coop scene, and you just decide to close. What will you do with those chicken? You have to sell them. How much you will somebody? How much could you sell those for? If the buyer realize the position that you're in. All right. So the buyer will call the shots. All right. So you might have to sell them for less than 50% of their worth. So that's what the management is saying, that it is best to downsize and watch the operation and pull out 1 foot at a time, instead of jumping out completely. That will cost you more than if you pull out gradually. All right, so that is the review of Jamaica Broilers as reported by the Caribbean Business Report. All right, and as I said, it is a business section of the Jamaica Observer. What I'll do now, I'll just go over to the opposite side of the said page and look at this report that is saying the central bank, the European Central Bank largest ever interest rate hike. All right, so that seems interesting. So we will get into that report. No. All right, so European Central Bank makes largest ever interest rate hike. So on Thursday, the European Central Bank had a meeting, and they decided to increase interest rate by 3/4 of a percentage point, that is 0.75%. All right, and it is said that this is the highest hike in interest rate in that region since 1999. That is on the eve of the dot-com bubble. All right, so even recently, the central bank, when most central banks were increasing rates, European Central Bank did increase rate, but the increase in rate were just by 1/4 of a percentage point, so by 2.5%, when most central banks were increasing rate by 0.5% and 0.75%. All right, so we know the European Central Bank decides to become more aggressive in increasing its interest rate by 0.75%. So why did they decide to now increase interest rate by this amount? All right, so let me read something from the president of the central bank, which is Christine Lagarde. She was the managing director of the IMF before becoming the president of the central bank. All right. So she was saying that the ECB would keep hiking rate over the next several meetings because inflation remains far too high and is likely to stay above our target for an extended period. All right, so the reason for moving the interest rate, as according to Christine Lagarde is that interest rate, they're seeing where inflation is threatening to remain far above target and for an extended period of time. Now, at the onset of the inflation back in 2020, when there was a disruption in the supply chain, people could not move about, so goods and services, goods could not move about freely due to the lockdown of economy due to COVID. All right, most central banks stated that, and this is when the phrase transitory was coined in an economic sense. All right, so they stated that interest rate inflation would be transitory, meaning it will be short-lived and they will get over that very quickly. However, we are seeing where after 2 years, inflation continues to be an issue globally. All right. And to a point where now the European Central Bank is getting real aggressive at wanting to cut inflation. All right. So, as we say, let me just explain what's happening on the ground. All right. So, as I said, because goods and services was not moving around freely, so there's a reduction in the supply of goods. All right, even though the demand for goods and services remain high. All right, so when the economy is operating in a normal sense, what you have is supply. The economy is operating in equilibrium. That's how they would coin it, all right, or state. So supply would equal demand. Seeing, so when COVID came and supply chain disruptions, goods and services was not moving around, was not being created. So what you find out is that supply fell, but the demand remains high. All right. Now the central bank's job, or the central banks, is intended to pull down demand. All right. So if demand remain high, and this is what caused inflation, demand remain high, and there's no supply of goods and services, so inflation increase. All right. So the central bank's job now is to pull down demand, to level it up with inflation and put back the economy in a normal operating way of operation. So inflation would not be a threat. However, the tools that the central bank has to pull down inflation, while that will cut demand, all right, so it will cut demand for goods and services, it has the potential to cut demand below supply. So if demand drop below supply, then businesses will have to further cut supply to equal demand again. And that will lead in what they call a spiral of falling prices. All right. So that is what we call a recession. So what the central bank is doing now has the potential to cause a recession. All right. So it's a very thin line that most central banks are operating on. So what they want to do is to cut demand, but they want to do it so precisely that it equals supply without causing a fall off in, all right, in our causing a recession. However, so what I want to make clear also is that in economy, a lot of things are self-fulfilling. All right, so they call it a self-fulfilling prophecy. All right, so if the central bank said, look, we're in a recession, what people will start do is to cut back on the demand, cut back on the spending on goods and services. And in them cutting back on goods and services, that will cause the inflation. So if the central bank come out and say, inflation, there is inflation, or inflation is expected, all right, in a couple of months, what consumer will do is try to rush to the market to buy goods and service at a cheaper rate in order to avoid the expense, the higher price in a few months. And them going to the market will cause inflation to increase or to happen. All right, so that's self-fulfilling. All right, so what that leads to is the credibility of a central bank. All right, so the central bank has some credibility. The central bank can get people to behave in a particular way because people believe the central bank. All right. However, what we're seeing since the onset of the coronavirus and the central bank's misstatement about the length and the severity of inflation, a lot of people are not believing the central banks anymore. So the central bank does have a credibility issue. All right. So the central bank, and this is why you see they're increasing interest rate, and it is not yet having an impact on inflation because people simply do not believe what the central banks are saying. They do not believe that the central bank can get it right, because what they're saying is that they got it wrong in 2020. All right. So let me just read this part of the article. All right. So the bank's jumbo interest rate is aimed at raising the cost of borrowing for consumers, government, and businesses, which in theory slows spending and investment and cools off soaring consumer prices by reducing the demand for goods and services. All right, so the reason why the central bank is increasing rates is just to take demand from the consumer, from government, and from business. Those are the three participants that causes inflation. All right, so the demand from the consumer, the demand from government, and the demand from businesses, all right, causes price to rise. So what the bank is doing is to raise the cost of borrowing for these three participants in the economy. And in doing so, they're expecting that there will be a cut in the demand, and that will calm inflation. However, the article went on to include the impact that the war is having, the war between Ukraine and Russia is having on the price of fuel, the price of natural gas, and that fuels also fuels the inflation monster. So the war in Ukraine has fueled inflation in Europe, with Russia sharply reducing supply of cheap natural gas used to heat homes, generate electricity, and run factories. That has driven up gas prices by 10 times or more. All right, so this is what the war is really having. This is the impact that the war is having on the gas price. So they're saying since the war started, gas price has increased by 10 times what it really was. And as gas price increase that affects most are all of the production in an economy. So we see where the production of commodities, all right, increase. All right, so corn, grains, those increase, and this is where the impact to the Jamaica Boilers operation can be linked. So the Jamaica Boilers use a lot of grain, use a lot of wheat, all right, for its production. And as grain and wheat increase in price on the global market, all right, that is what is impacting the operation of the Jamaica Boilers. So this is a lot, and it is just since the onset of the coronavirus that I realized how much the world economies depend on Ukraine and Russia for a lot of things, like natural gas, like commodities, like steel. So there's a lot of things that come from this part of the world. All right, now, is Europe expecting a recession? All right, so as I said, if the central bank is too aggressive, it might cut demand too far and hence cause demand to fall below supply, and then businesses will have to cut supply to level up with demand, and as a result it causes that spiraling effect, which is what which is what recession really is. All right, so Lagarde, Christine Lagarde is saying, look, she's not fearing a recession. And as I tell you about the credibility of the central bank needs credibility in order to create that self-fulfilling prophecy. Now, if people are not listening to what the central bankers are saying, or not believing what the central bankers are saying, then we might be in for a longer inflation ride. All right, so Lagarde is saying she's not expecting an inflation, all right, and the only time she's expecting inflation. I mean, she's not expecting recession in the Eurozone. And the only time a recession might occur is what she called a worst case scenario, where, let me read it, where Russia cut off natural gas, all right, from Europe. So let me just read it. So Lagarde said a 2022-2023 recession would occur only under a really dark worst case scenario where all Russian natural gas is cut off, alternative supplies are not available, and governments have to resort to energy rationing. All right, so she's saying that that is the only way she's seeing where a recession can really happen in the Eurozone is when Russia moved to cut off all natural gas supply and they can't find any alternative. So even if Russia cut off the natural gas supply from Europe and they can find alternative for the natural gas, then she's not seeing where there is a high probability of a recession. So the natural gas will have to be cut off. There is no alternative. And then the government would have to resort to rationing gas and gas product. Then that's the only time she's seen where a recession would happen in Europe. All right, but if you're reading the article, Putin is threatening just that, to cut off the gas supply, the natural gas supply from Europe. All right, let me just find that part of the article. Now, Putin is saying that if the economies of the world, the who know who, decide to put a cap on the price at which they purchase the natural gas, then he might just resort to cutting the supply from Europe. I'm not seeing where that is in the article. I saw it sometime. All right, I want to read it specifically from the article. All right, so European supply officials decry the cutback as blackmail and aimed at pressuring and driving the European Union over its support for Ukraine. Russia has blamed technical problems and threatened, here it is, Russia has blamed technical problems and threatened this week to cut off energy supplies completely if the West institutes plan price caps on Moscow's natural gas and oil. All right, so just what Christine Lagarde fears, all right, the complete cutting off of the natural gas, of Russia's natural gas from Europe, that is what Putin, Russia, is threatening to do. If it is that Western institutes plan a price cap on Moscow's natural gas and oil, so if America decide to put a cap on the price, because now there's a, remember, there's a small supply of natural gas and oil, all right? So the supply is cut, so price are increasing, but America wants to cap the price at which they pay, Western Institute pay for natural gas and oil. All right, so they do not want to pay the market price, but Putin is threatening that if they decide not to pay the market price for his gas and his natural supply, his next move would to completely cut off gas and natural gas and oil from Europe, which Christine Lagarde fears will throw the European zone in a recession. All right, so these are some interesting times. So what we need to watch to decide whether or not Europe will be thrust into a recession is what the Western institutes decide, what price Western institutes decide to purchase Putin's oil at. All right, so what the Western institutes do not want to do is to purchase Putin oil and natural gas at very high price, which he would in turn use to support the war. So it's a form of sabotaging the war, his war strategy. All right, so he's very keen. Putin is very keen on that. And as I said, it is very interesting times. Now, the hike that we are seeing in Europe's interest rate is having an impact on the value of the dollar. Now, the American dollar is really strong at this point for those who do currency trading. So the American dollar is really strong because American interest rate is higher than the other major economies. So people are investing in America, are buying the US dollar just to get the higher interest rates. And we're seeing where now Europe moving very aggressively to increase their interest rate might see some purchasing power flowing back to the euro. All right. However, with the threat of a recession in euro, all right, the threat of the recession in the eurozone might outweigh the increase that the eurozone has recently made in its interest rate. All right. So that we're supposed to see, we're expecting to see a still weaker euro dollar, all right, as the increase in rates is still below what the absolute rates that America have. So the ECB's benchmark is now 1.25% for lendings to banks. All right, the Fed's main benchmark is 2.25%, which is higher than the Euro 1.2%. All right. So it is between 2.25% and 2.5% after several large rate hikes. So in America, the Feds have been doing a large rate hikes, on 0.5% rate hikes, and I've done it on several occasions, whereas the Eurozone was very modest about its rate hike. All right, so that includes 2 of 3/4 of a point. The Bank of England key benchmark rate is 1.75%. The Bank of Canada raised rates Wednesday by 3/4 of a point to 3.25%. All right, so there you have it. I hope you enjoy us reading these articles. All right, or not reading those articles, the article, but analyzing what is in the article, because we don't really want it so boring. However, what we're saying is that the Jamaica Broilers Group is having a problem, all right? And that problem stems from what is happening in Europe, all right? So we see where there's a threat of recession in the Eurozone. The central bank is trying to prevent that recession from occurring, all right? And that is the reason why you see the central bank, all right, is increasing, putting all these policies in place. The central bank is increasing rates so as to tame the inflation monster. And that inflation is what is having that impact on Jamaica's Broilers operation, all right? But coupled with that, we believe that the Jamaica Broilers is in for some real tough competition, because we believe the companies head on with some competition at home from the Caribbean Broilers Group, all right? I would think that is a double whammy that Jamaica Broilers operation is currently facing. Now, as we say, if you have not already liked the video, remember to like the video. And if you have not subscribed to the channel, subscribe to the channel, and we see you around.